Hello and welcome to Virtual Investor Conferences. On behalf of OTC Market, we're very pleased you joined us for the last day of our three-day Metals and Mining Conference. Our first presentation of the day is from Heliostar Metals. Please note you may submit questions for the presenter in the box to the left of the slides, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Stephen Sook. He's the Vice President of Investor Relations and Development for Heliostar Metals, which trades in the OTCQX Best Market under the symbol HSTXF and on the TSXV under the symbol HSTR. Welcome back, Stephen.
Great. Thank you very much for having me again. So at Heliostar Metals, we have the bold ambition to become the next mid-tier gold producer. We have a pathway to go from 30 to 40,000 ounces of production this year to 300,000 ounces by the end of the decade. If we're able to do that, we believe we'll be able to achieve a market cap of $2 to $3 billion. There's not a company out there with that sort of production profile at a low AISC like we'll have that hits below there. And our differentiating factor is we have a pathway to be able to do that without issuing any additional equity dilution. We have a bootstrapping mentality and a portfolio that allows us to harvest cash flow to be able to fund the equity portion of our Ana Paula build project, and that which will be a real cash generator for the company and go from there. So we believe that represents a 4 to 5x in our market cap from here today that could be reflected in the share price as we continue to grow. I will be making forward-looking statements today, and you're welcome to review this at your leisure. Now is a great time to be a gold producer. It's very binary right now. You're either producing some gold or you're not. And as an organically funded developer, our gold production is a very important part of our cash generation for the business. The margin expansion in this environment has been phenomenal, and it's an opportunity that will allow us to tackle a bunch of the projects that we have in front of us, a bunch of the low-hanging fruit left by previous operators of our asset base, and that will allow us to drive the company forward at pace. So why become a mid-tier gold producer? This was a very unpopular direction about 12 months ago when we really cemented our ability to do this, and now it seems like everyone's scrambling to become a gold producer with growth ambitions. At a mid-tier, you're both predator and prey. At 300 to 500,000 ounces, you're large enough that the senior gold producers are forced to look at you as a potential acquisition. You're a big enough acquisition to move the needle in terms of their growth profile. And if the market is at that point in the cycle, they're willing to pay up at a high multiple for that, then that's great. And that's certainly an opportunity that we would look at. Conversely, you're also predator. If the market rolls over, we believe we'll find ourselves in a very strong competitive situation with the cash generated from Ana Paula. We'll be able to pick up assets cheaply again as we have and continue to grow in that 50 to 150,000 ounce per year range, which is still very meaningful growth at that 300 to 500,000 ounce per year spot. So it's a great position that will allow us to create value through all parts of the market cycle. So we picked up a portfolio of assets from Argonaut Gold in 2 transactions. First, our Ana Paula project in 2023. That became our flagship development asset and still is the crown jewel of the company. Everything else I'll talk to over the next couple of slides will be how we get to build Ana Paula. Then, unfortunately, as Argonaut Gold continued to unwind itself, we picked up the rest of the portfolio you see here. Totaling $15 million in cash, we picked up 2 producing mines and 3 pipeline development assets. We own all of these outright, and it was an incredible transaction at a great time in the market. We continue to have great success finding opportunities at these assets, and we'll be, as I mentioned, use the cash flow from La Colorada and San Agustin, 100 to 150 million over the next 2 years to be able to fund the equity portion of the Ana Paula project, which we will be a significant cash generator and continue to develop this pipeline. Our mines are in Mexico, in Sonora and Durango, 2 very high quality mining states in the country, with our Cerro de Gallo project in Guanajuato, our flagship Ana Paula project just 4 hours outside Mexico City in the Guerrero Gold Belt, and our San Antonio project in Baja Sur. All told, we acquired just over 7 million ounces of gold if you add it all up, 2.9 of which we have to treat as historic at Cerro de Gallo until we put out the technical study to bring those formally onto our books, which we plan to do later this quarter. This is really the key slide for Heliostar. This is our planned growth trajectory from 30 to 40,000 ounces this year, 50 to 60,000 ounces in 26 and 27, bringing on an additional 100,000 ounces in 2028, funded by the cash flows over the previous 2 years, and then continuing to add a 100,000 ounce block near the end of the decade by bringing Cerro de Gallo online. We have the right profile in that our production trajectory is upwards and our cost trajectory is downwards. We believe that we can bring on all these assets and be at a first quartile AISC somewhere around the 1,300 ounce per year mark. Sorry, excuse me, $1,300 per ounce AISC mark. Our current cap table is very strong. 30 million cash in the bank, no debt, 300 million shares fully diluted outstanding. That includes almost 30 million warrants that are materially in the money, 40, 60, and 90 cent range. So our stock price is well through that, not providing any sort of overhang. Those extra warrants are starting to be exercised and have started to bring in some of that $9 million US. We have a very strong shareholder base, an excellent split between institutional shareholders who have been longtime supporters, seeing the vision that we're trying to build, and a great high net worth and retail following. We're also adding broker research as we continue to grow and become a more notable player in the space, which we continue to work on. Our management team, we pride ourselves on being a very, very technically driven team powered by the strength of our convictions. We buy assets where others have not seen opportunity, and we have. That's been borne out twice now, and we'll go through some of the details there. Our CEO, Charles Funk, is a former exploration geologist with Newcrest Mining in Australia. Worked with Oxiana and Oz Minerals, a growth company there, before moving to Canada about 10 years ago. His major commercial success here was with Vizsla Silver. That he led the team that discovered the Panuco deposit and put that company on very strong footing, but wanted to do something in his own vehicle, and that's Heliostar. Greg Bush, our COO, spent 10 years as the COO of Capstone Mining, the major copper producer in Mexico, as well as other senior technical roles. He's built and operated mines and is an incredible asset to us. The other person I'll point out on this slide is Ramon Davila. He is a doyen of the Mexican mining industry. He's helped build First Majestic alongside Keith Neumeyer. He's worked in government. He's worked for the permitting agency. He has incredible reach through the Mexican mining world and has been a great addition to our board in the last 12 months. Our 2025 guidance is 30 to 40,000 ounces of gold. We produce a little bit of silver that we'll start taking as a byproduct, and an AISC of around $2,000 an ounce. Now, you will notice that AISC is somewhat artificially inflated by the San Agustin restart. This is a mine where we recently got the first open pit mine expansion permit in Mexico under the new administration. We're incurring a bunch of costs in Q4 to bring that mine online that will then normalize to around $1,800 an ounce next year. So we'll have a very strong Q1, Q2, and Q3 from a cost perspective, a high cost Q4, and then coming back down next year to the more normalized run rate. Nevertheless, in this mining environment, we're making some incredible margin, and this slide shows that. Our two key results came in at $1,540 per ounce all-in sustaining costs. So in a $4,000 gold price environment, you can imagine the sorts of margins that we're seeing rivaling some of the biggest companies on earth. At our La Colorada mine and San Agustin mine, these were mines that were underinvested in by Argonaut. They were always profitable. They're always just had that cash removed from them and sent north, first to build the Florida Canyon mine and then to build Argonaut's Medino. This was an opportunity for us because there are a number of opportunities at the mines that were not meaningful for Argonaut that are very meaningful for us. The foremost of these is the stockpiles. Right now, we've been producing from stockpiles since January this year and continue to do so through the rest of this year from the junkyard stockpile. Believe it or not, this was mined as waste in the 1990s, but grades 0.2 grams a ton. And we're actually making more money mining the waste now than they made from mining the ore back in the 90s. That's the true power of the gold price right now. And having that cash flow affords us the ability to tackle additional projects within the portfolio. We now intend to go from stockpile mining that will fund an expansion of a small open pit, Veta Madre, that will eventually fund the larger open pit cutback at Creston. Beta Madre is about 6 months of stripping for 6 months of production, but a much higher gold grade, 0.7 grams a ton. We have a method here by which we look at bedding down production. Now that we've evaluated the opportunities at these mines, we have a set mine plan. We're now looking at expansion opportunities and then exploration upside beyond there. Beta Madre will be our 2027 production and potentially pulled into 2026. And then Creston right now provides an additional 4 years of mine life. It's a larger pit. We actually did more drilling around the edges of it in 6 months and have been done on the property in 6 years. We will be putting out an updated technical study showing optimized economics from both resequencing to optimize cash flow in the near term to be able to fund Ana Paula, as well as improved economics that will also show the impact of that drilling that we did around Creston. So stay tuned in the next couple of weeks for that. And now in terms of the resource growth potential, we immediately in front of our face, we see an additional 30,000 ounces at a larger pit at Beta Madre. It's actually in measured and indicated resources. However, it hangs on a couple of high-grade drill holes. As a technically conservative team, we want to come back, do 5 or 6 confirmation holes to really prove it's there to ourselves before we commit to this additional cutback. However, that could provide an additional $30 million of free cash flow once we're able to tackle that near-term opportunity. Beyond that, there's down dip extensions at Creston that we hit, some pretty spectacular grades, 9 meters at 25 grams a ton, 8.5 meters at 5.5 grams a ton. So we see potential for a high-grade underground future here at La Colorada. We'll be coming back in the next couple of months to do a dedicated program evaluating the down dip potential below the Creston pit and really seeing how the scale of that underground opportunity. That's the near-term production growth opportunities, and then the wider land package provides us a lot of hunting ground for exploration. This is virtually unexplored with modern, sophisticated methods outside of the main mine trend. However, there's 2 past-producing pits at Las Dundas and Tianitas. The soils target, believe it or not, is a 2-kilometer-long golden soils anomaly. Never seen a drill hole. So that's certainly something we want to get to. We believe we'll be mining here for more than 10 years beyond the 6.5-year mine life currently on the books as we continue to flesh out these exploration opportunities and bring them into our production profile. And then at San Agustin, this is a near-term tactical opportunity for us to be able to harvest a significant amount of cash flow over the next 14 plus months. This is where we got the first new open pit mining expansion permit in Mexico under the Sheinbaum administration. This is a 14-month mine life, producing 45,000 ounces of gold, but for only a $10 million upfront initial investment, we believe we'll be able to make $40 million at $3,000 gold price. At $4,000 gold price, that's closer to $60 million in net free cash flow over that 14-month mine life. This is going to be really a cash generation opportunity that will allow us to bolster our balance sheet quickly and, as I said, fund the equity portion of the Ana Paula build. Similar to at La Colorada, now that we have a go-forward production plan and we'll start producing here in Q4, and then we're going to look at some of the near mine oxide gold opportunities. The immediately apparent one is extending that corner reserve area where we did get that new permit. The other ones are around the existing open pit where we see potential for oxide gold. We realistically will add probably between 6 and 16 months of additional mine life here to be determined by the drill bit, obviously. But every additional quarter we produce here at today's gold price is an extra $15 million in cash flow. So we're looking forward to getting hunting here to extend the mine life. And then Ana Paula is really the crown jewel of our portfolio. This was a project that had over $100 million invested into it by previous operators. We picked it up for 10 cents on the dollar, and I've really seen an opportunity here that was missed by previous owners. This was previously envisioned as a large-scale open pit project with a complicated flow sheet and marginal economics. Credit to our technical team, took a look at the data and said actually 80% of the economics are contained in this bulk tonnage, high-grade underground core. So we're completely reimagined this, and we think it'll show some pretty jaw-dropping margin. We are now focused on bringing that bulk tonnage, high-grade underground panel into production as quick as feasibly possible. The combination of the economies of scale from the bulk tonnage mining alongside the grade kicker means that you can get an incredible amount of cash flow from 100,000 ounces a year. We will be putting out a PEA in short order that'll show the first economics for how we envision this project. We believe that we'll be able to bring this mine online for $300 million in initial capex, producing 100,000 ounces a year at $1,000 per ounce all-in sustaining cost. Now, keep in mind, these are preliminary numbers, and we're doing the work now to show those in the study, but order of magnitude, that's where we expect this to land. This will be an incredible cash generation engine for the company going forward, with lots of opportunities there. We just released our second set of drill results from an ongoing 15,000 meter drill program here. Results like 88 meters at 8.8 grams a ton, 30 meters at 6.3 grams a ton. This ore body has incredible continuity with incredible grade thicknesses. I think a good vein system is, let's say, 5 meters at 10 grams a ton. There's also, that's 50 gram meters. Here, this is 5 grams a ton over 60 meters. So that's 300 gram meters, a very significant opportunity for us. There's also that $100 million really gave us a head start on infrastructure. We will be able to advance a decline that was put in place by a previous operator, Alio Gold. So this is a third of the way to the ore body. We'll be able to extend that another 800 meters next year with the cash generated from San Agustin. That allows us to do two things, both de-risk the early stages of the mine life, as well as start to look at the down dip potential. We're working on some of the metallurgy flow sheet here now. We believe we can get 80% recovery from conventional gravity recoverable gold flotation to CIL. So a very standard practice that gets 80% recovery. And we're also looking at putting a small bio-oxidation plant or BIOX plant on the back end that will allow us to increase recovery to 90% and extend the mine life by being able to process additional material in the mine plant. Also, capturing an additional 10% recovery on a 5 gram per ton ore body in this sort of gold price environment is a significant opportunity and not something we're going to leave on the table. We will be advancing this quickly to a feasibility study to be released in early 2027 with the idea that we'll have a permit modification in hand from the existing open pit permit to an underground permit. We'll be able to have the feasibility study construction document and a financing package already in early 27 to be able to pull the trigger on construction, 18-month build time, and in commercial production in the second half of 2028. There is a 2% royalty on Ana Paula that will come in once we start producing. Nevertheless, this is an incredible set of economics that we believe will be shown in that upcoming study, which we don't think the market fully appreciates yet. The other thing that extending that decline will allow us to do is hunt for the source intrusion lower down. Geologically, we're much higher than our neighbors in the Guerrero Gold Belt, who are absolute elephants of deposits. Torex's Morelos complex and Equinox's Los Filos complex are ballpark 15 million ounce deposits each. Geologically, they sit much lower. Ana Paula is a more distal expression higher up in the rock column. And we want to go see if we've got a similar deposit to Morelos or to Los Filos at depth. We'll be in a position to do that from the end of the decline and start to get results out on that opportunity, that exploration upside in early 2027. At that point, that's pick your number somewhere between 3 to 30 million ounces. That's the potential opportunity here if we manage to hit that source intrusion and contact skarn lower down. Bringing Ana Paula online, though, will get us to 150 to 200,000 ounces in 2028 at corporate AISC around 1,300. And then we'll put out a study shortly that'll show where our next 100,000 ounces comes from. That's our Cerro de Gallo project in Guanajuato. This was a project that showed a 300 million NPV from a study done in 2020 at $1,600 gold. We're very excited to put out refreshed economics and our version of what we think this project could look like at around that 100,000 ounce per year mark. Again, that'll be this quarter, so stay tuned on that. So this is our track record of what we've been able to do over the last little while, deliver on the promises that we've made, take the opportunities that we saw early on, turn them into a solid production and business plan, and now continue to deliver de-risking steps and additional upside through exploration. So think of our catalysts in 3 layers. First, we have the quarter in, quarter out results that show that the business is working. We have a very solid base. We're generating cash flow while we're reinvesting it in the business right now. We'll show that cash build on the balance sheet through next year before we start building Ana Paula. The second layer is our NAV growth steps. We believe between the Ana Paula PEA, the San Agustin, the La Colorada updated technical report, and the Cerro de Gallo PFS, that cumulative value is way more than we think the market is expecting, and we expect a lift once we're able to get all those studies out the door this quarter. And then the third layer is our exploration upside for a little bit of sizzle. When you get results like 88 meters at 8.8 grams a ton from infill drilling Ana Paula, we expect the market to continue to be reminded just how high quality that bulk tonnage ore body, high grade ore body is, and continue to see upside from that level. If we execute through our business plan kind of as laid out here, we should be a much more valuable company with the same share count as we continue to de-risk the projects, advance towards our production goals, and hopefully create a lot of value for shareholders along the way. That's our plan. I'll go to the Q&A now. I do see we have a number of questions coming up here. Sorry, one second. What differentiates Heliostar from other emerging mid-tier gold producers in Mexico and globally from both an operational and valuation standpoint? That's an excellent question. I think I've helped answer that a little bit. Our major differentiator here is our ability to grow without having to issue any dilutive equity to get there. Being able to use the cash flow from our existing operations into successively larger opportunities and then into Ana Paula to be able to fund that. So I think that's really, we are, I think, one of the growthiest companies out there right now. And then that's funded by a very, very strong cash producing base on a go forward basis. What are the key regulatory risks to advancing, operational regulatory risks to advancing to the targeted 500,000 ounces of annual gold production by 2030? So the key risks, I think at this point, is execution. Really, we aren't a drill bit story. We're not necessarily a permitting story. The risk is really building a mine. So that is something that we are tackling and have the expertise to be able to do. Individually, as a group, everybody has done what we've said we're going to do here. This is our first time doing it as a Heliostar team, but certainly all the expertise in-house. The other, from a regulatory perspective, we do need a permit modification at Ana Paula. It's fully permitted for an open pit project. So from open pit to underground, everything going in the right direction. And that is a very straightforward permit to get. Torex down the road just got the same style of permit modification under the previous AMLO government in Mexico. So I think that's a fairly low risk point there. Sorry, next one here. How big can Ana Paula resources become in total? I think that's a great question. I think, the Ana Paula project proper that we're going to put into a mine plan, we're targeting around 1.5 million ounces between M&I and inferred, of which we expect, about 1 to 1.2 to convert into a mine plan, into reserves, once that feasibility study is out. Now, if we hit the contact skarn lower down, again, that's where you could get a multi-million ounce, potentially tier 1 level deposit. But we'll let the drill bit let us know what we have down there once we're able to start drilling. What's the average AISC cost across all the mines? Right now, our portfolio runs at about an $1,800 per ounce all-in sustaining cost. We've actually come in better than that. Q2 was supposed to be our weakest quarter, and we came in at 1540 AISC, generating about 14.5 million in operating cash flow from the mines. But overall, that's what the life of mine AISC is here. Once Ana Paula comes online at around $1,000 per ounce all-in sustaining cost, you're due to see our corporate consolidated AISC drop notably. You can do the math of it'll be around $1,300, which would put us in a very strong position on the global cost curve across all gold producers. Has Triple Flag royalty, the holder on the Ana Paula royalty, conveyed any support for funding the development of the asset? They have not at this point. Really, we're looking at 100 to 200 million in project level financing. We haven't really started those discussions formally yet. We believe it'll be a very competitive process given the extremely strong economics that we think will be shown by the upcoming study on Ana Paula. We believe we're looking for things that will be a competitive cost of capital is how we view that. And we'll start those discussions next year once we're far enough down the technical study pathway to be able to show some of those potential financing groups. You need no dilution and any share offerings to get to 300,000 ounces or even 500,000 ounces of production in 2030. As I laid out here, we can fund our plan as laid out to 300,000 ounces without issuing any additional equity. To get to 500,000 ounces, we will be looking at M&A opportunities. Again, we are looking for things where we see opportunities from our technical expertise that might have been missed by others. That's something that we pride ourselves on, and will be how we continue to create value from any M&A opportunity. All right, going through the rest of the questions here. Are there any fears that any mid cap around the 1 million ounce per year production size will take you out, given the large free float shareholder, outsider, insider? I'd say right now we're not really a takeout target, nor do we want to be, nor are we shopping that sort of thing. We've got enough growth in front of us that we want to realize that value for shareholders before even entertaining those sorts of offers. That being said, anything's available for the right sort of premium. Our responsibility is to create value for shareholders. So, at a certain point, I'm sure the mid tiers will come knocking. That being said, I think our shares are in very friendly hands. We do have a very strong institutional support base around that 50% mark. So I don't think we're a hostile takeout target right now. I also believe, and this is just my opinion, that those mid tiers are looking for de-risk production. We're happy to have that risk right now and execute through it to be able to bring that production online and have shareholders rewarded with our execution by bringing the share price up. Looks like we're just about through the end of our time here. I'd like to thank everyone for joining today. Hopefully you've see a compelling opportunity in Heliostar, as I did when I joined 6 months ago. And if you have any follow-up questions, please feel free to reach out. We're always happy to engage with shareholders and potential shareholders and dig in where needed. Thanks so much, and have a great day, and enjoy the rest of the virtual conference.